What's going on, guys? This is Lamar, and I just want to take you through the trades that I think are looking good. I'm in two of them. They look pretty good to me. I've already entered them, held them over the weekend. Hey, hope they go well. So there's about 6 trades that I'm looking at. 2 of them I'm not really looking at, but I want to show you them because they're interesting. And then there's a bunch of pairs in here. Right now I think I counted them last week or week before. Got like 35 pairs on here because it doesn't really matter what I trade if I'm trading and seeing proper market structure. So the whole trading plan I have is really simple, and it's actually kind of right here. We can just look at it. This is a great example. So Australian dollar NZD is I've got market structure higher high or high, higher low, higher high, higher low, higher high. Well, what do I think's next in the sequence? Probably a higher low. That's going to be my guess. And so I'm trading with the larger trend. And so this is the H4 that I drew out. But when I zoom out on Australian dollar NZD, you can see we were in an uptrend. We consolidated for a period. We consolidated. And it's not that it was flagged, but we had a consolidation period. We went sideways right here between this range. And so now, as we get back into market structure, which is the series of moves like that, you can see we're in bearish market structure, and then we start to shift and breach these highs. So what does this look like? I mean, some people say, oh, inverted head and shoulders, but it doesn't matter. It's market structure. So I entered this trade on the retest of these highs, and I waited for the bounce. So that's the next thing I do is I wait for the retest of the level and the bounce. There are other traders that do this. This is not a magical system. There is no magic. If a trader watches this video and goes, oh, he stole my system, I would think they were absolutely stupid, because everybody who trades market structure does this. It's not rocket science. That's the best part of it. You can do it. I can do it. Anyone can do it and make money. You're not a rocket scientist. So we got price coming back and retesting this area, and it bounced. So it bounced, and that triggered my entry. And I think I actually entered right here on the bounce. So I've been waiting, for a few days. I was waiting for a few days, and then it turned Friday on the 31st. Yeah. So I was in it for like 2 days. Then Friday rolled around, and I think that's when I entered it. I don't know. But I'm in the trade. And so the other thing is, people go sell you really big risk reward ratios. Oh man, I'm going to hit this 1-to-8 risk versus reward. 1 risk, 8 reward. I think it's pretty stupid too. I mean, they don't know where the market's going. So right now, I'm basically just targeting kind of this recent resistance zone, and that's target 1. So my job's going to be, if price is so kind to move here for me and actually get up to this resistance zone, I'll take probably 30 to 50% profit, and I'll move stops to break even, and I'll let the rest ride, and I'll just see, can we get any further than that? And that'll be great. If we get further, great. If we don't, I've already taken profit, move stops to break even. I've locked in my profits. And if I can catch a bigger move, that's awesome. I'll catch the bigger move. So this is the trade. Really easy setup. Then going to Swiss franc JPY. Oh yeah, sorry. And I placed my stops basically just below the level. You could place them here. You could have been really aggressive and place them here, and that's fine. I'm not very aggressive with stops. I just kind of placed them reasonably, so that, I've got a chance that if the market starts coming against me, I could say, it looks pretty bad. It shouldn't be closing down here if it's going to really be bullish. And so, yeah, anyway, that's my thought. Swiss franc JPY. Swiss franc JPY, it looks actually really good. I think it looks the best of any of these that I've marked. You can see these 24 hours. So we've got this low, then we've got a high, then we've got a higher low. Remember, these are daily candles. And now we've got a higher high. And I don't see any reason that price doesn't push up to these monthly levels. It's in open air in regards to recent price action. So price action to the left within a reasonable amount of time. I've got some resistance from 2018, but the resistance that's really going to come into play is the stuff that's right to the left. It's not that we aren't going to get rejected, but if price action was right here and it was really choppy and there's a bunch of stuff right here and it was all like that and we were coming up, yeah, I'd think, this could be resistance, this could be resistance, this could be resistance. All that could come into play. But you see, we are just in a lot of open space. So it looks good. The daily close also looked really good above those highs. What triggered me in was waiting for this resistance, and then it breaks it, and then it retests it. And so, I know math's really hard on that one. This was a Friday, so you got that initial bounce. I didn't enter on that initial bounce because that was literally, I think that bounce happened at like the close on Friday. Yeah, 24th, and then jumps to 26th. So, it came back, price consolidated. And as we pushed up on this candle right here, that one right there. Oh man, can I draw arrows or what? That nice little candle that punched away. And I think there was some decent volume in it. I just triggered into the trade. And I put my stops basically below monthly open, but monthly open of July won't really help me where I placed it. I put it right on top of it. And below weekly, and my primary reason was these swing lows right here. So like I said, I place pretty conservative stop losses. I'm a patient person. I'm not looking for 100% gain in a year. And if I do, great, don't care. Your whole goal is just make 30 to 40%. Because, I don't know if anybody's gone and knows how to do the compounding with a calculator, but like on all of your smartphones, you can compound. And wow, I'm 26. So if I compound 40% of 100,000 for 14 years, which puts me at 40, 100,000 compounded by 40% annually for 14 years turns it into $28 million. And I don't know if you know, but a lot of volume transacts with Forex each day. So you've got a lot of room for your account balance to grow and your strategy not to change, or your entry process not to change, or your exit process, because that's what happens. You'll have to scale in more, scale out more as your position size increases. So I think this is a very scalable system, and I would love to compound my account by 40% annually for the next 14 years and walk away with my nice $28 million and not ever walk away because, what else are we going to do? But anyway, not being aggressive with my stops doesn't bother me. Do whatever you want to do. So we bounced, I entered. I'm targeting these monthly highs or these monthly levels, this monthly level singular. And it's really more of a zone. So you can see I got this red zone marked out. This is really the resistance right here. So it's not exactly like to the penny, but I've already marked it out. And I don't see why I want to continue up. When I look at that 24-hour candle, looks good, good close. I do know that that's a decent rejection wick. I wasn't thrilled that occurred. I would have much rather it closed strong. But in my mind, it was Friday. It was the afternoon on Friday. So people are closing their positions. So yes, the market could still be very bullish. That's what I'm betting on. I've already moved my stop loss to break even on this trade. I've taken zero profit, even though it went into 1.2 R profit. As you get used to trading, you've got to sometimes allow your profits to deteriorate. I didn't know that. I didn't learn that magically. I learned that from books I read. I actually cared what people who have done it for 30 or 40 or 50 years, I cared what they had to say. Might blow your mind, but you don't know anything unless you open your mind up to learning from people who have lived their lives doing this. And those people know they don't know anything. That's the key to life, is knowing that you never know anything and constantly being open to learning. So I am all open to learning and suggestion. If you have suggestions, you can post them in the comments on YouTube, and I will be happy to chat with you because I sure don't think I'm that smart. And so basically we bounce. I move stops to break even as Friday afternoon closed because realistically, I don't think that price should come back to my entry if it's going to continue to be bullish. We've got a support like a resistance here, so that should come in as support if the highs do not come in as support. And you can see if I go to lower time frame, that like to the tick, they came in as support on Friday afternoon. So Sunday in 45 minutes could open up different. When the New York Stock Exchange opens, it could be different. And then I could have said, oh God, look, my 1.2 R that I could have had turned into absolutely nothing. But that's part of making a lot of money, is you've got to be willing to let profits open positions deteriorate in order to catch those larger moves. And that's a really hard thing to learn. If you sit there and have great theories and you take all your profits at 1-to-1, you're not going to catch those large moves. And those moves are going to make up 80% of your trading profits. So you have to be willing to let things like this happen. That's just a great learning example. I'm telling you this like I'm the master of none or the master of all or whatever. But I've gone through just a horrible processes, a lot of pain. I've gone through a lot of pain psychologically trading. I've done things that are stupid. I've done things that are great that turn stupid. But you got to get to a place where it's all just a process and you're fine with it. And, if I trade and this trade goes bad, it's just whatever, I manage my risk. I did things the way I should do them. I'm happy with whatever comes out of this trade, whether it's nothing or whether it's a great profit. I'm happy. So that was a nice sentimental moment. Now let's keep going. And I'm only going to go through the pairs that I really think setups are on. And then I'll give you just two quick examples of thoughts that I have on trading. So Great British Pound, Swiss franc. This is kind of a sketchier trade. So you can see price has definitely been just in full effery, like going sideways in junk on GBP CHF. But now it looks like we had a strong consolidation here. And from my historical experience, or from my experience, so what I know, what could be different. I don't know what you know. You probably know a lot more than me. You go make a video and send it to me. I'll watch it. I don't care. So we consolidated sideways. That looked great. I wasn't trying to trade it. I actually did trade it. I thought we were going to break on this one. I thought it was a really tight break and retest. I lost. I think I closed position early. It was not full risk, so it's okay. It's okay. And when you consolidate for a strong period of time and then price picks a direction, I've just found that the direction that it picks can be really strong. You could also end up with a fake out, like a throw over, and then price comes all the way back down and it just tricked everybody. But if it does make that move after a strong consolidation period, I generally feel like it makes a stronger move in that direction. The market all can see what has happened. It's been consolidating. Oh my gosh, it picked. And the general market can say, we're now all going to go this way. So that's my theory. But here's my flip side, is we broke out. And then we just have this nasty, weird candle that just smashed us right back down. And now it honestly just looks like it's going to roll over and fall back into the range and just be a deviation from the range. So my original plan, I drew back here, a few days before the end of last week. And I thought we were going to break and retest to the high side. Or I was prepared. I didn't think we were going to do that. But if we did it, I was prepared. But now we get this weird candle. So I'm good. I'm just good. You got the weird candle. I don't like it. So I'm not going to trade it. Not even close to interested. Just forget it. Just trade something else. So moving on. Weird candles don't interest me. It's Friday, so I feel like these upper wicks on these breakouts were really just because people are closing Friday positions. But, I don't know that. But Euro JPY, I've been waiting for this. I thought this was going to be a great trade. I've been waiting for this. And we hit it resistance monthly. So I am looking for longs, but I'm going to wait for buyers to step in and this thing to really bounce. I pretty much say that all the time. I'm going to wait for the buyers to step in. Yeah. And so 1 hour, it's really easy to see resistance. And this is what I like to call confluent support. And people are going to say, oh, that's not confluent, man. You don't have Fibonacci's in there. Man, I can draw Fibonacci's. I used to trade only Fibonacci's. I used to trade Fibonacci's as zones. I can trade Fibonacci if I want to, bro. Look at that. Confluent with the 382 monthly. Swoosh. Like right before the impulse. I know how to make it confluent, but I don't care. So H4, but this is like an H4 level to me. And then the H4 level, it shows the respect of monthly. So in a way, it gives me a stronger monthly level. I'll tell you the one thing I don't generally like to do, though. It's take really tight trades around those monthly levels because they always could just be poking above and then reject back below. So if you're going to take like a break and retest a monthly, your probabilities increase significantly if you get that nice rounded move away and then you retest. Now your probabilities just shot up for success. When it's tight like this could easily fall right back in and just break down and have acted kind of like a sweep of these highs. It could end up being some sort of sweep of those highs. But I got a bias here. You know, the euro's been ripping. I feel like the euro JPY was a little slower to rip than euro USD. So, you know, I'm going to be looking for this bounce off of this retest. And I like how clean this zone is. I just drew in some random thing. I'm not in a trade. This is all just random. I could, you know, whatever. I don't know where this is going to go. But I don't really care. I'm going to wait and see. So I think we're going to be waiting and seeing. And you notice I got the little red dot, red little arrow thing, whatever. That's an alert. Set the alerts. You know, go have a beer. Set the alerts. Relax. Because if you just set the alerts and you relax and you wait for the trades to come to you, and if they come to you and they're not that good, and you're like, dang, man, I've been getting excited about that for like a week, and that looks like trash, just don't enter it. I literally have 35 pairs I can pick from. And if they don't appear to have proper market structure, if they're just look like choppy junk, and if the trade comes to my entry zone and it doesn't look good, I got 35 pairs to trade from. Why do I care? I don't care. So I'm waiting for this. We'll see if it bounces. If it does, awesome. I'm all in. No, I'm not all in. I'm totally joking. All in's just a phrase. All in, meaning like I'm going to risk 1% max. All in. Here's my 1% risk. Really ballsy. So yeah, we're waiting for that. Euros are. So this is the other thing. Great thing to talk about. You see, I got 3 euro pairs. I actually don't want to take all 3. I want to discuss one of them. But if I were to take all 3 of these euro pairs, then I'd take a third of percent on each. No more than like anything that would total to 1.5% risk. Because you don't want to be overexposed in a single pair. Tons of YouTubers don't talk about it. There are a few that do. But yeah, you got to watch your exposure. And everybody knows that. You can't sit there and trade 3 euro pairs long. They're all euro pairs. You know, there are euro as the base. And so, yeah. So, yeah, anyway, Eurozar. Let's go to Eurozar. Eurozar is, oh, this is a cool one. This one got me excited too. I think it's going to be a great trade if it sets up. So we got this uptrend, and then we got this downtrend. I know, rocket science. That's pretty good determination. And we got this low, we got this lower high, lower low, lower high, lower low, whatever. And now we've actually breached these highs. So we kind of had a shift. This is what you're looking for, that initial shift in market structure. And so I think that this uptrend has a good probability of continuation. And so that is what I'm looking for, is a continuation of the uptrend as market structure shift to the high side. So I want the market to pull back as designated by this beautiful arrow I've drawn. I wanted to pull back, retest that level, and bounce. You can see it was support, resistance, resistance, and kind of resistance here. And now I'm just looking for that pullback and that retest. So what I won't do, this is key. This is super key. This point, focus, is if the market moves all the way up here and then it comes all the way back down there, and I drew it too far, but if it moves all the way to the highs and then comes and retests the lows, no hablo. I am not taking that trade, because now you got some type of double top potential. What you want is the market to pull back now, because the market pulls back now, you don't care if the double top happens. You're in profit. You've closed partial positions. You can let the rest ride in case it does bust through there. But you don't want the market to come up and test this weekly and then come down to, you know, that level. That's a no hablo trado. I do not speak Spanish. I took French, and I can only say really rude comments in French. That's what I retained from French. Retain the things that are awful to say. You know, great idea. I was such a little tard when I was a kid. God, my parents were so nice to put up with me at all. Anyway, so Eurozar, the patience. See, I got my alert set. I'll be drinking my beer. It'll go off. I'll go, oh, yay, bounce. In the trade. Done. Euro NZD. This is just one I want to discuss, because this is how people catch trends early, but I'm not going to take it. I was looking at it just to play out this way. But basically, you can see this is strong downtrend. Like, that is a strong downtrend. And if it starts to move to the high side, or shifts in market structure, which is exactly what we discussed, you know, lower low, lower high, lower low, lower high, lower low, holds the low, double bottom, breaks the high. Okay, now we might have a shift in market structure. So this could be traded long, and to these levels right here. Looking at those historical levels right to the left of the price. So it could be traded up to those levels, but there's no clear trend. There's not really a clear trend. Now, there is, if I zoom out, you can see there's a low, a higher low, potentially a higher low. So I do kind of have a bias that this could be the higher low in this series, even making a higher low after that nasty push up. That was freaking insane push up. And so we could move up, but I'm probably not going to take the trade. It's just me. I'm probably not. You can see it already retested monthly. I had this drawn out. I thought it was going to kind of round out and then come back. And it actually just kind of popped up, broke down, and then popped right back up. So if I was going to enter, that might have been the trigger that would have got me in. But I'm good. So just how nice was that emotion right there? I'm good. You're good. If you're sitting there like, oh, should I get in this trade? Oh, I'm kind of worried. I don't know if I should get in this trade. You got to be able to say, oh, I'm good. I'll just pass. Whatever. It's not like the market's not going to present a million more trades to you. It's not like if I'm some dude that was trading back in let's see, in 2005, that dude got a bunch of trades and he's still getting trades today. So why are you freaking out over this one trade? Don't. Who cares? Literally. Who cares? I don't care. So I'm not really taking that trade. But what would I do if I did take that trade and I was in another euro trade? I would cut down on my position sizing. So now I want to go show you two examples of trades and my thought process behind them. And I did not take these trades, by the way. I haven't taken them. Not yet. If they get real good, I'll take them. So I really like price to clearly mark up in value. I like it to accept the higher value. I like it to time and space. That's as simple as I can put it. I like time and space between the resistance and price. So like this, which I didn't trade, which, great job me, but it didn't dig into the zone. I really wanted it to dig into the zone. We had a resistance. And then it turned into resistance still. You can see this whole just kind of resistance level. And we broke above it. And it was confluent with monthly, which makes it even better that it popped above it. But we got a nice rounded time and space. Like this is, the break above is on the 21st. The retest is on the 24th. So you got 3 days, not exactly, but 3 days of time and space between the break and the retest. So now I feel like I have a higher probability that the market has time to accept that new higher value. And as it bounces, that's a good trade. Although, like I said, I would have liked it to dig just a little more into that level and then move up. And that's why I didn't end up triggering into it. But that's my fault. I probably could have taken partial position entry and waited for it to dig here and just put my stops below reasonable, positions. But I didn't do it. I admit it. I didn't do it. And so what did it not do here? I was looking for this break and retest on this H4, and there was no time and space. It basically closed twice above it, 3 times, and rejected right below it. So unless you've backtested a breakout trading system, this is not the trade for you. You want, just from my experience on breaks and retests, you want this rounded move, and then you want to come back. Doesn't have to necessarily be that high, but you got to have more space and more clearance and more time between prices break and prices retest. But like I said, if you backtest a breakout trading system, which I'm backtesting right now, you should always, once you find one good system to trade that you execute continuously and repeatedly, and I say master one system and skip all of the wasting of time where you bounce between systems. I'd say once you get one system that is profitable based on statistics, not based on your guess, once you get a system like that, trade it for an extended period of time. Even if it goes into a drawdown period, it will come back. It's all about managing your risk during drawdown periods. But once you have gotten comfortable with that system, to continuously be a good trader in changing market conditions, and to try and maximize your trading ability, you should always be backtesting, not always randomly trading new ideas. That's totally different. You should be backtesting new systems. So right now, I'm in a really intense back testing process for a break system, just a pure close break above key level system. And where I'm going to place my stop loss, I have multiple variables that I'm analyzing on every single trade that I'm recording. So if I record a trade, it literally takes me 5 to 7 minutes to just record one trade. And that's if I'm super focused, just like punching in numbers, like in zone. So 5 to 7 minutes. So getting an ample amount of data, which for me is like, I'd really like 500 plus trades of data to be able to say that, this is a good system for this pair. That's ideal. That's being excessive. I think it's being very, just wise. But it takes work behind the scenes to come up with probable successful systems. Because what you're really testing for, you're testing for the numbers of how successful the system's going to be, what the profits are going to actually be from the system. But you have to test systems because when drawdowns come, and they will come, I feel like I'm in church. I don't go to church, but that's totally separate. I'm all for whatever. But drawdowns are going to come, and if you haven't done the back testing, you're not going to be strong enough right here to hold through that drawdown period. Not to hold your position, but to hold your system, strong and tight. Like, you will let go of that system so quickly if it goes through a drawdown period if you haven't done the math. And that's totally separate. So what did I say? Time and space. Thanks for letting me go on my rant. Time and space makes me feel better, makes me feel like I'm going to win. That's what it's all about. It's not about money. It's about feeling good. There was another one I wanted to show you, and I don't know where it is. I don't know where it is at all. So anyway, another example right there. Where's my time and space? Also monthly, but so because I don't remember which one it was that I was going to go through. Oh yeah, here's another one. Great example. Totally another educational point, but remember I talked about consolidations. Picking a direction leads to stronger moves. I was going to take this short because it's really clear, right? Move up, retest, breakdown. Really clear short. But it consolidated. You see I highlighted the consolidation. We got strong consolidation. Now we're moving up on a strong candle. I don't expect that to hold. I wanted to see price make a quick, unprepared move up where buyers and sellers haven't come to a real good decision except this historical support zone now flipping to resistance. But instead, we've gotten this consolidation so that we can just pack a punch and blow right through that resistance level. So I'm no longer taking this short on Euro SEK because of that consolidation. I will find another trade where the market doesn't have time to get its feet under itself. So that's just something that I think's important. Whether it's wrong or not, I don't care. I'm profitable. Makes me happy. So that's today's video. If you have any questions or want me to cover any other pairs, just leave a comment in YouTube and on the YouTube channel, and I'll get back to you, because right now there's like 0 comments. So if I don't get back to you, it's definitely not because of all the comments that I've had to go through. Y'all have a great trading week. I hope you're profitable. Good luck to you. If you have questions, I'll help with anything. Just send me a message and I will help you personally, because I clearly don't have a lot of people messaging me on YouTube right now, because I just started this channel a few weeks ago, maybe 2 weeks ago. I don't know. Have a great week. I'll talk to y'all soon.